could be upwards and continue upwards for the rest of the month?
It's looking pretty amazing at the moment for the Australian share market. We're pretty close to that 5,200 point level, and of course the high for the year has been at 5,249 points. So it does look like the market on a bit of a roll at the moment. It was a fantastic day for the market. The market was up by 1%, and that's despite 13 out of the top 200 companies trading ex-dividend today. They include the likes of BHP Billiton, Atlas Iron, Fortescue, AMP, Challenger Financial Group, the ASX, just to name a few. So it was a big barrier to overcome, especially given that BHP's dividend would have wiped 7.2 points off the index just by itself. So all across the market we saw a sea of green, every single sector trading higher, with one exception, and that's the utilities space. We saw a little bit of selling in the utilities space to make room for the Duet capital raising. So no doubt a bit of portfolio shuffling in that particular space to make room for the capital raising that's going on in that sector. But the best area was the consumer discretionary sector. Now we saw the consumer discretionary sector up a massive 2.2%, and this is a trend that we've seen in the past month. In fact, in the past month, the consumer discretionary sector has managed a gain of 5%. Beating the market, and the next best sector is the energy sector, with a rise of just 3.6%. So it does look like investors positioning themselves for another rise in consumer sentiment after this election is over this week.
Is that what you'd put any jump in consumer sentiment down to, the election? Does it figure that broadly?
I think if we have a look at what's happened, we've had a long wait for the election this time round. So businesses have put off spending, and consumer sentiment has been quite weak as well. If we have a look at previous elections, typically we do see a bounce in consumer sentiment. But not only that, I think this particular election, it also lines up with a number of cycles. One's the earnings cycle. We got to read on company profits, and although they're still deteriorating, they are improving. And this particular financial year, we are expecting to see the cycle to turn and actually see positive earnings growth. If we have a look at the interest rate cycle as well, we're probably close to the end of the fall that we've seen in interest rates, so we'll probably see interest rates stable for a long amount of time before rising again. So I think it's a bit of an inflection point for the market. The consumer discretionary sector really running quite strong coming up to this election, and it's also been a strong performing area in terms of earnings season. Some of the stocks that have been performing well do sit in this sector, including the likes of G8 Education as well as Crown. So it's nice to see a sector that has been quite a difficult one to be in the last couple of years doing.
Would we likely see a reaction other than McMillan Shakespeare?
I think there's three key things to watch out for. First of all, we've already mentioned consumer sentiment, and we've seen some of those cyclical areas starting to run. I think second, the possibility of the abolition of the carbon tax is a huge one, especially for the airlines, where it does have quite a significant impact, as well as the building material companies. So watching that carbon tax impact, and of course we know that there's possibly going to be a bank levy, and that may impact on the big four banks' profits in the range of about 0.5% to around about 1%. So I think they're the three key things that we're looking for from the election in terms of individual stocks. So you can't go past McMillan Shakespeare, really just moving on the back of the polls which are released every weekend.
Billabong?
Well, we've seen Coastal Capital, the one that has proposed this EGM, active in the Australian market before. They took a 17% stake in Alinta Gas a few years ago when Alinta Gas was looking at funding from TPG, and that was a $2 billion funding deal back then. So it looks like once again they're active, and it's probably around the financing, and there has been a large uproar from shareholders who want the board to have a look at this deal from Oaktree as well as Centrebridge. Now, Oaktree and Centrebridge have said that their deal is going to save Billabong between $119 million to $143 million over 5 years. And while that sum of money doesn't seem like a lot to some businesses on the ASX, this represents around about half of the market capitalisation of Billabong. So it is quite big in terms of Billabong's business, especially seeing that it is struggling. So the shares understandably jumping by a massive 14%.